Alright guys, welcome to the webinar by AP. That's me. It's going to be the charting webinar here, and yeah, so I appreciate all you guys for showing up, sticking around with us a little bit after close today, and let's get on into it. So first, just to introduce myself, I go by AP. It's just my initials. Nothing too fancy, nothing too secretive. I'm one of the traders here at PT. I've been trading for over 5 years at this point, and I've always kind of had charting as one of my strongest suits. And some recent findings in my charting abilities have led to some massive discoveries that I can't wait to share with you guys soon. Some contents of the class are going to contain charting basics, so getting all your levels. I know we've seen a lot of questions flowing around in the chat on how to create levels and stuff like that. Definitely will all be covered in charting basics. I will have charting tips and some secret tricks that I use. Some chart comprehension as far as understanding what you see on a chart when you look at the chart. And then finding your charting style, as I will get into that here in a second. I think that's probably one of the most important things as far as when it comes to charting. And then part five, I have some secret sauce that I have never told people before, so I'm excited to let it out. I don't think I've really told anyone, so I don't even know if I've told Professor or anyone about it, so I'm excited to let some of that stuff out of the bag and really give that to the group. So, like I mentioned, I have top three charting styles, and it's very important to find a style of chart that fits you as a trader. My first style is called zone charting, which is like the skeleton of the chart. It's in its simplest form, but it's very effective. This can be used for many different strategies, and definitely will cover all the strategies for each of these that you can be used for. I got the AP 2.0 charting. It's a scalping focused charting system to bring confluence to a smaller time frame, and thesis charting, the perfect mix of a short-term trading with a bigger term outlook. Now let's get into some examples here. If you've never seen it, this is kind of what my zones look like on the right here. Zone charting is my foundation of all my charting analysis. This is the skeleton in its simplest yet a very effective form, as I just said. This can be used for many strategies. Using this system, we'll discover the ability to identify key levels. We're going to find a way to use these levels to create a roadmap for the day and days to come. You're going to be able to use the diversity of the chart to help make key decisions in your trading and overall build a ton of confidence in your foundation as someone with the ability to chart. This is an example on ES here. I'm just showing you that it does work with ES on the overall market here. The big things that I want to point out are just how accurate these levels can truly be. We have like a top here come all the way down on a sell-off here with this key level here. And it actually reminds me of kind of today's price action. We closed at lows. We didn't get this bounce, but came all the way down and caught a nice bounce here. So this is kind of what it looks like on ES. This is what it would look like on Google. So it does work on equities as well. It's not something that's just exclusive to trading futures or anything like that. It does work on every single chart that I've applied it to. Google, once again, just using these key levels, we open, we get a nice cover popped here. Before we reject, we come back down, we base around here, and we get a ramp back up, and we end the day around high a day, which was also this level where we rejected open, and we close. You could have closed some calls there. I'll give you just a live example of what happened on Monday here on SPY. Like I said, it does work on equity as well as futures. I like charting it on all of them. So on Monday here, we got a nice cover pop to the top of the zone. We had a nice trend line right here, if you see it. And right here is ideally where I would be entering puts. And in this example, we had the 415 puts for Monday's expiry, June 6th. And you'll get a visual here in a second. But the entry, according to Beast, should have been 88 cents to a buck 35 with an exit of 3.5 to 386. And in this scenario, you would have yielded above 300%, which could have actually been more than that depending on where you entered in your range. Now we have QQQ on the same day, on Monday, doing a similar thing, running up to the top of the zone, struggling to break above it with the 311 put showing the same confluence, arriving at Beast in this 79 cent to $1.09 range with an exit at these key levels down here at the 5 range. This scenario would have yielded roughly 500%. So like I said, there was a lot of confluence with these option charts as well as the equity charts when you have them aligned, as we all teach and preach around here. to be looking at your calls and puts as well as your equity and your levels and all of that good stuff. So when you look at both of these loaded together, it really paints a full picture that you can trade off of. So once again, that 415 put, the SPY equity was reaching the top of the zone. You can see the 415 put was basing at Beast right here in this yellow oval, and it gave you plenty of time to actually enter for a textbook trade all the way up to this purple line that I know we talk a lot about. Entering at top Beast would have yielded you 321%. As you see, there was a lot of chance to get filled below that. The QQQ, same exact thing as the SPY chart. The Qs were reaching the top of its zone. It had the same correlation on the puts as well, basing and ready for takeoff. So basically, why do we tell you guys to have all these up at the same time? It's because it tells the whole story. Both equity charts on SPY and QQQ lined up to be at the resistance at the same time. Furthermore, the option charts were marinating at Beast, preparing for launch, and that's exactly what they did. The next style of charting that I have in my arsenal and that I plan on teaching is the AP 2.0 levels. It allows to bring a bigger picture analysis down to a smaller time frame. Very friendly to people that are just getting used to scalping or even day trading. I know a lot of people come from a swinging background, so it does a really good job of bringing big pictures down to a small time frame, allowing you to trade on a small time frame. Is really going to help you improve on your ability to identify key levels, help identify possible turning points all throughout the day, can relieve stress intraday by providing reactionary levels. There is a system within the chart to trade around that I will go over in the class as well. It helps tell the full story, and then it has an easy built-in trade management system, like I just said, and then it contains many different secrets that I will have to reveal to show you how to make these types of charts. So this is kind of what it looks like overall. If you've never seen it before, it makes intraday trading and scalping less stressful. So here is Monday. Just like the previous example when I was using the zone charts, we also got to the top of this sell zone is what I call it. These red zones right here, I'm looking for resistance and look for us to reject. That is exactly what we did as we pushed up. We got to this rejection zone and we actually came all the way down. We kind of popped back up, touched this rejection zone and came back down to this buy zone before finding some support and bouncing up. But the move that I was highlighting previously was just this rejection here all the way down to this level here. So you have a lot of confluence when you have different charting systems, and some people will like to the view of others more than other ones, but when they're all lined up together, it always creates a textbook trade. Now these are the Qs. It did get a little above the sell zone, so it wasn't as clean. But if, like I said, if you were to compare that to every single other chart, the story was basically painted already. In this sense, you would almost just be waiting for it to fall back into this resistance zone and possibly even risk of breaking back above, right? And same thing, it came all the way back down to where this key level right here, as we bounced at it a few times. And so just putting this all together creates a lot of confluence. The third style of charting that I have and has recently became probably my favorite um, is thesis charts. In my opinion, it's the best way to put all of your charting knowledge into one condensed hyper-focused chart. Many of my charting secrets will be revealed in the creation of these charts as well, as there is a system that I have to find these levels that I haven't told anyone about before. So it's a super precise charting system, the happy balance between a long-term perspective and scalping. So sometimes if zone charting is too big and 2.0 charting is too small for your liking, this is a very, very happy balance in my opinion. So this is the easiest way to also force yourself to follow a plan because, as I will mention here in a second, there is a put zone in the area you're looking for calls. You have managed levels, and you have, is not pictured in here, but a take profit target. So you have your plan predefined, and yeah, it's my favorite way to force myself to follow a plan. And overall, these charts are how I find my core trades, aka my A plus trades. I'll give you an example here. This was on ES the other, not the other day, sorry, a few weeks back. We were rejecting all pre-market, the sell zone where I was looking to allocate some shorts. I was a little upset this morning. I remember very specifically. We rejected it, and I was really hoping to get that once cash opened. And we got this nice wick up, and I entered some puts right here, targeting right here, which I did. I ended up locking them all the way here, and as you see, we fell below. The interesting thing about this chart is I actually gave this chart out to the free chat the day before it happened. The reason why I gave it out was because this 38.55 level was actually low of year at the time. We have not been lower than that in a few years. So not many people had levels, and guess what? I was able to use a techniques that I will go over in this class on how to have this level right here at 3807 and a half when 3808 and a half when 3807 and a half was the low of day, and if you look at the chart, is still the low of year right now. So how was I able to be off by only a point? That is what I plan to teach you guys. This is a Tesla example. Probably my biggest, if not one of my biggest trades this year, came from this thesis and this thesis chart. So what you're looking at here is once again this put zone that I was really looking to allocate risk against. As we were below it, we kept rejecting, and I kept adding all day on Monday every time we failed. And then I woke up on Tuesday, we were still below it, and we quickly rejected it and flushed all the way down. My full target was this 900, this cyan level. As you see, it did continue to go lower, but I caught nearly 100 points on Tesla. Now, all in all, this was a call out from my subservice here. And what I'm really trying to show you here is that I was able to predict the entry at the sell zone. I called out the 850 puts at 2. I then managed at managed levels. I managed at a double. I managed at 5. And then, like I said, I was leaving runners for 900. Put a little winky face there because that was my target, and I know it was a big target, but we actually hit it. We fully exited the trade at my take profit levels, which was at 10 at that level. And I had a massive, massive target to hit, and it did. So on this trade, I actually hit the 850 puts, 2 to 10. It was 500%, and I lock and rolled into another trade that was also 500%, creating over 1,000% combined in one of my bigger trades of this year so far. So all in all, this is all things I hope that you will be able to take away from this class, and I tend on teaching everything. I want you to be able to have the ability to do what I just did here, calling it out, understanding your managed levels, and knowing where you exit the trade for monster trades. So if that is something that interests you, I am teaching a class on all of that. It's going to be June 18th at 1 p.m. That is next Saturday. I'm going to offer 3 different packages. There's going to be the bronze package where you will have the recording of the class and you will get a copy of the class's slideshow. If you want to go with the silver option, you will get the recording of the class, copy of the slideshow. You'll be able to attend the class live where you get to interact with me live, ask questions. Hey, go back over this, do this again. I want to see this again, etc. And as well have a live Q&A at the end. And then since the class is on Saturday, on Sunday night and probably the Sunday night as well after that, I will spend an hour charting with you guys as a group where you guys can bring your own tickers and we could chart together, compare our levels, etc., and really come up with an elite thesis for the week using these new charting techniques. Then the gold package is going to include all of the same things that was in silver and bronze. The additions are you will get a month to my service included, which is currently valued at $100 in itself, and you will also get a 30-minute one-on-one as well to redefine, pick my brain a little bit more if you want, maybe get a little extra help if needed. So that's really it, guys. I thank you guys for all attending. As promised, it was under 15 minutes. And if anyone has any questions, feel free to fire away.